Hello, welcome to the program. First, let's have the markets. Begin with Africa, where sentiments were mixed at intraday. Nigeria's main index was up 0.08%, while South Africa's JSE index dropped by 0.44% at intraday. Similarly, Egypt, the benchmark index climbed by 1.27% at intraday, while Kenya closed Monday's session positive, up marginally by 0.06%. And over to the Middle East, major indexes traded mostly positive. The Abu Dhabi main index was up 0.76%, while Dubai's index advanced by 0.61%. Elsewhere in the region, Saudi Arabia's main index also rose by 0.34%, while the Qatari exchange fell by 0.10% at intraday. And over to Europe now. Let's cross over to Chelsea Delaney live in Frankfurt. Great to have you, Chelsea. Let's start off with stocks. As European indexes began the week mixed, what will traders be watching in the days ahead?
Week for markets here in Europe and really all around the world. We have started a little bit mixed actually throughout the day. Stocks have regained some strength. We've seen the Euro stocks, the broader benchmark for the European markets, actually hitting a record high today here in Frankfurt as well. The DAX is up about 0.7%. So a positive note for this week. Really what investors are going to be watching is central bank meetings. Tomorrow we have the Reserve Bank of Australia meeting. They are expected to change their policy because of this surge in inflation that we're seeing as well. The Bank of England and the Federal Reserve are meeting this week as well. So we're going to get a clearer picture from central banks about how they're thinking about these price surges that we're seeing and the threats that pose for the global economy. The Fed really going to be the main driver for investors here in Europe. Many are expecting the Federal Reserve to announce that it will start to taper back those bond purchases that have been keeping the American economy afloat as they start to struggle with rising prices. But how they sort of describe that change to policy and what their expectations are for the coming years is going to be really crucial as well. Another thing that investors are going to be watching is the Opec Plus meeting later this week. We've already seen oil prices about double this year because of low supply, not really keeping up with the surge in demand as economies recover. So whether OPEC Plus starts to bend to some of that pressure that we're seeing from other countries' oil consumers, that's going to be really crucial for markets as well.
All right, I guess investors have a lot to look out for. Well, the UN's climate change conference is also kicked off in Glasgow. What can we expect from European leaders at this two-week meeting?
Well, European leaders definitely want to position themselves as a frontrunner in terms of climate change policies. The EU has committed to reaching net zero emissions by the middle of this century, so 2050. They say they'll be the first bloc, the first continent to reach that goal. But there's still a lot of open questions that global leaders are going to be facing at this summit in the next couple of weeks. Over the weekend, we saw G20 countries really struggle to reach consensus on what steps the global economy, what countries need to do to keep emissions in check. So I think what the EU is going to be really focusing on is trying to get other countries, particularly some of the holdouts like China or Russia, to step up their commitments to climate change policies as well. We're seeing really the bigger question of how all of this is going to be financed. A lot of countries agree that we do need to take these steps, but it will have an economic cost. So developed countries have pledged about $100 billion to poorer countries to help them finance these changes towards cleaner energy and more sustainable economic practices. But so far, they haven't come through on those promises. So we're starting to see more and more pressure growing, both here in the EU and on other countries, to step up their financing pledges. So I think that's something we could also see becoming a key discussion over the 2 weeks of this COP26 summit.
Right, and over the weekend, the EU and US reached a deal to end a long-running dispute over steel and aluminum tariffs. Tell us more about this deal.
This had been a big thorn in the side of EU-U.S. relations over the past couple of years. These were tariffs that were put in place on EU steel and aluminum under the Trump administration, and they hadn't been taken off under the new Biden administration. So the EU really wanted a resolution to this dispute, and they seem to have found a breakthrough. So the U.S. says they will remove the tariffs on some degree of EU steel and aluminum imports, and in return, the EU is going to remove about 3 billion euros worth of tariffs that it had put on place on U.S. goods. So we've seen markets really reacting to this today. A lot of stocks here in Europe for steel and aluminum producers have rallied as well. Stocks in the U.S. have really benefited from this as well, because products like Harley-Davidson motorcycles had been getting hit by 25% tariffs here in the EU. So that's really crucial for these companies, especially as they face higher cost for commodities and energy. It's very expensive right now, so taking some of those tariffs off will help these companies and consumers. But it's also been described as really a breakthrough in transatlantic relationships, the transatlantic relationship that had been so strained under the Trump administration. So there's a lot of hope that this means that the EU and the U.S. can really come together for more difficult discussions, including these climate talks that we're seeing over the next couple of weeks.
All right, Chelsea, thank you so much. I'll talk to you tomorrow. All right, let's look at East Africa now. Textile manufacturers and workers in an Ethiopian factory worried that the exports to the United States have been talking about potential impact if Ethiopia is suspended from the African Growth and Opportunity Act, AGOA. The agreement gives it duty-free access to the U.S., and Ethiopia has invested billions of dollars in the past decade to position itself as a light manufacturing hub on the African continent. Textile and apparel made up more than 90% of the goods exported duty-free into the U.S. Last year. Let's take a listen to this report.
A needle plunged in and out of a gauzy white cloth that Finotessalam Negusi was guiding through her sewing machine in an Addis Ababa factory. Stitching shawls for export to the United States pays Finotessalam's rent, her daughter's school fees, but now her job is in danger as the United States ponders whether to suspend Ethiopia duty-free market status, citing abuses and a growing famine in Ethiopia's war-ravaged northern Tigray region.
I'll be seriously affected if this factory is forced to close. I send my child to a private school, so I pay the school fees, and I also pay for the school bus. We live in a rented apartment, so we have to pay rent too.
A suspension threatens Ethiopia's aspirations to become a light manufacturing hub and hard-won economic gains in a nation once a byword for famine and poverty. Although Ethiopia is not a large global supplier, it's another problem for global fashion brands such as the Children's Place and the PVH Tommy Hilfiger, Calvin Klein. COVID-19 is squeezing manufacturing capacity, ports face bottlenecks, and supply chains are disrupted.
We were able to create close to 200,000 direct jobs and millions of indirect jobs. So if AGOA is delisted, if there is a decision made to withdraw AGOA, it will have a direct impact on our effort to create more and better jobs for our citizens.
Over the past decade, Ethiopia's government has spent billions constructing a dozen industrial parks and related infrastructure. Some factories produce goods for U.S. brands such as U.S. fashion giant PVH, owner of the Calvin Klein brand, Speedo and Tommy Hilfiger labels.
AGOA, as you know, it's a privilege that's given to sub-Saharan African countries, and it's a great incentive when you know there is a discount of 15 to 20% that you can allow from your margin, and to make it reasonable for the customers that we are selling to in the U.S. And we've used AGOA for the past, since we started basically, 15 years ago.
Ethiopia exported about $237 million worth of goods duty-free to the U.S. under the AGOA in 2020. The U.S. Department shows that this represents more than 90% of its textiles and apparel.
All right, let's look at the Asian markets now. Shares in Asia Pacific were mixed on Monday as investors reacted to economic data that showed a mixed picture of Chinese manufacturing activity in October. Japanese stocks led gains regionally as the Nikkei 225 jumped 2.61% to close at 29,647 points, with shares of fast retailing soaring 4.22%. The Topix index climbed 2.18% on the day to 2,044 points. Hong Kong's Hang Seng Index closed 0.88% lower at 25,154, while mainland Chinese stocks were mixed on the day, with the Shanghai Composite fractionally lower at 3,554 points, and the Shenzhen Component climbing 0.17% to close at 14,476 points. Elsewhere, South Korea's Kospi advanced 0.28% to close at 2,978 points. While the S&P ASX 200 in Australia closed 0.64% higher at 7,370 points. And stock futures slipped in early morning trading on Friday as the shares of major technology companies suffered following disappointing earning reports. S&P 500 futures and NASDAQ 100 futures both traded in negative territory. Futures on the Dow Jones Industrial Average were 76 points lower, while Amazon shares dropped 4%. Extended trading after the e-commerce giant badly missed the earnings and revenue expectations for the third quarter. Apple stocks also fell more than 3% in after-hours trading. Shares linked to an economic recovery, such as Ford and Occidental Petroleum, were also indicated higher in pre-market trading. And oil prices rose on Monday as expectations of strong demand and a belief that a key producer group would not turn on the spigots too fast helped reverse initial losses caused by the release of fuel reserves by China, the world's biggest energy consumer. Brent crude futures rose 69 cents to $84.42 a barrel after hitting a session low of $83.03 a barrel. U.S. West Texas Intermediate crude futures gained 42 cents to $83.99 and fallen to $82.74 earlier. Some analysts believe fundamentals have not changed and the oil market will remain tight in the near term. Well, in South Africa, annual producer price inflation for final manufactured goods jumped 7.8% in September 2021 from 7.2% in August, and this is the highest level since February 2016. This is part of a general trend we're seeing across sub-Saharan Africa with rising inflation. Well, I'll be discussing this with Matt Kindiga, Associate Practice Lead, Sub-Saharan Africa at Frontier View. Great to have you on the program, Matt.
Hi, thanks for having me today.
All right, so what do you think has been causing the rise in inflation across Africa?
Well, it's worth noting that it's quite significant that inflation has risen over the last couple of months. Only 6 to 12 months ago, inflation rates had fallen to multi-year lows in countries like South Africa, as well as other countries like Ghana and Kenya. So this was quite a significant shift compared to what we had seen. And this recent rise in inflation and inflationary pressure is a bit concerning. So certainly it's being driven by both a combination of domestic and global factors. In most countries, it's a result of global factors, such as high shipping costs. So global shipping costs are roughly 10 times what they were before the pandemic. We've seen a rise in global oil prices, which is starting to feed into higher domestic fuel prices, especially in countries with not fixed fuel prices such as Kenya and South Africa. And we're also seeing elevated commodity prices for agricultural commodities. So this is a bit of a double-edged sword for countries in Africa because they benefit from higher agriculture exports, but they are seeing a significant increase in food prices. So certainly it is contributing to higher inflation. There's also the effect of currency volatility and currency shortages in countries like Ethiopia, Angola, and Nigeria. So that is also contributing to inflationary pressures across the region.
Right, and what's your outlook, and how do you expect central banks to, respond to this issue?
Certainly. So here at Frontier View, we have actually revised up our inflation forecasts for every market that we cover in sub-Saharan Africa. And in countries with already high inflation, such as Angola, Ethiopia, Nigeria, Zambia, we expect them to continue to experience double-digit inflation well into 2022. In markets where inflation is very low, such as South Africa, Kenya, and Ghana to an extent, we are expecting inflation to rise gradually, but we don't necessarily expect double-digit inflation in 2022. In terms of how central banks will respond to this environment, it really differs from market to market. So in markets where we have relatively low inflation at the moment and interest rates are quite low as well, we do expect there to be some scope for, say, the South African Reserve Bank, the central banks in Ghana and Kenya to raise interest rates, especially if economic recoveries continue as we're currently seeing. But we are likely to see less hawkish stances when it comes to interest rate decisions in central banks in Nigeria, Nigeria, Ethiopia, Angola. And this is because central banks will have a much more difficult time balancing the different competing aims of stimulating their economies, ensuring that economic recoveries continue, but also trying to keep inflation low. So we don't necessarily think interest rates will rise uniformly across the region.
I guess that's the problems the central banks have to deal with at this point. But also businesses have a problem here. How should they respond to a higher inflation environment?
This is quite a tricky question because I think most businesses were expecting the overall demand environment, operating environment to be better as we move away from the direct impacts of the COVID pandemic. So most businesses we were speaking to were assuming that inflation rates would be a bit softer going forwards, but this certainly won't be the case. So businesses face an unexpected squeeze to their margins over the next year as a result of higher inflation. What we are seeing is that the multinational companies that we advise, that we speak to here at Frontier View, are taking a multifaceted approach. So some companies are looking at their product portfolios to determine whether they can offer more affordable products to their customers, or thinking about changing the product sizes or introducing new products to make sure that their products remain competitive and affordable and attractive. We're also seeing a really big push on reducing shipping and logistics costs. So thinking about how companies can use their logistics capacities more efficiently to ensure that their cost base remains relatively low. And finally, companies are also very interestingly considering increasing the frequency of their pricing cycles. So whereas companies were previously reviewing their prices once every 6 months or 12 months, we're now seeing this change to between 3 and 6 months on average. So certainly there are a number of things that companies can do to respond to this environment over the next year.
All right, Matt. Always great to talk to you. Thank you so much for your time on the program.
My pleasure.
All right, let's look at North Africa. Now, the World Bank has approved a $360 million loan, development policy financing to support Egypt's post-pandemic recovery. According to the bank, this is to further support achievement of the operations development objectives. Asian Infrastructure Investment Bank is considering parallel financing for the operation of the same amount using the same package of policy reforms agreed with the World Bank. World Bank praised Egypt for its growth during the pandemic, although Egypt still faces issues as the country's debt reached a record high in June. Under the conditions set by 2016 IMF loan, Egypt promised to reduce fuel subsidies in order to secure $12 billion. And Kenya's official forex reserves dipped by 38.4 billion shillings in October, on the back of low remittance inflows and possible dollar sales by CBK to cushion the shilling. Country's dollar reserves have been declining for the past 6 weeks, currently standing at $9.17 billion. The reserves have dropped from $9.52 billion held as September 24th. The forex reserves are now the equivalent of 5.61 months of import cover, down from 5.82 months at the end of September. The Reserve Bank of Zimbabwe increased its bank rate from 40% to 60% in a bid to tame rising inflation, depreciating local currency. Zimbabwe's annual inflation rose to 54.5% in October, driven mainly by a resurgence in the volatility of the parallel market exchange rate. Zimbabwe dollar officially trades at 90 to the greenback, but was low as 180 Zimbabwean dollars to $1 on the widely used parallel market. These developments prompted the central bank to cut money supply through a raft of monetary measures, including a significant upward adjustment of the bank rate, increasing statutory reserve requirements, and tightening reserve money by reducing its quarterly growth target. As the world struggles to curb climate change, Gabon is seeking to protect its mangroves, one of the world's few net absorbers of carbon. Let's watch this report.
The Central African country is home to the world's tallest mangroves, some of them reaching over 210 feet high. The towering trees have made Gabon one of the world's few net absorbers of carbon, as the plants sequester the greenhouse gas 4 times faster than forests on land. Vincent Majibe works for Gabon's National Parks Agency. As the world struggles to curb climate change, he has been tasked with collecting data to try and work out exactly how carbon is locked in the mangroves. He says protecting the trees is vital.
The mangrove ecosystem, we have really to be careful about them, not to destroy them, because if you destroy mangrove ecosystem, then we will emit a lot of carbon from that.
As well as storing carbon, the swamps are rich in wildlife and serve as natural flood defenses. However, many are under threat from urbanization, with former swamps being illegally cleared for construction.
We're hoping that with time, people will understand the importance of mangroves more and more. Because I always say in my talks, if we destroy all those mangroves, if we destroy all this forest, water will replace it.
A report by the Global Mangrove Alliance found that in the last 20 years, mangroves have recovered from being one of the world's fastest shrinking habitats to one of the best protected, with over 40% in a conservation area.
That's it on Business Incorporated. Thank you for watching. I'm Ladi Williams. Bye for now.